Hello, ladies and gentlemen. Once again, welcome back to Mali Investment Talks. I am your host, Joseph Areu. We spoke in the last session about investing for safety, and in fact, we've been talking about different products even before that, aimed at helping you to achieve different investment goals, whether it's safety, income, growth, or just liquidity. Today, I would like us to step back a little bit and think about fund managers. Remember, for each of those products we've been talking about, there is a fund manager. Usually there is a fund manager through whom you might have to go in order to access that product. Of course, you could choose to do it by yourself, but in many cases, you will access those products through a fund manager. So how do you select a fund manager? So when I talk about a fund manager, these are usually regulated entities licensed by the authorities to provide different investment products, whether it is bonds or unit trusts or shares. You have entities which are regulated and licensed to provide these products or to intermediate between the suppliers of those products and the clients, that is you and me. So we call them fund managers. And there are so many of them in the market. So how do you decide, how do you assess the value of a fund manager to you? That is what I want to talk briefly about. Once again, remember, I will not be able to tell you all the details about this within the next few minutes that we have. So I would urge you to please use the contacts at the bottom of the screen to get in touch with me, or indeed, if need be, speak to any financial advisor to get details about these important topics. So, as I said, a fund manager is basically a regulated entity licensed by the authorities, by the regulators, to provide and indeed to help investors manage the different investment products in their respective portfolios. So I will start by saying that fund managers are generally safe to deal with. So I will not start, I wouldn't want to raise your pressures or something like that by making you think that, oh, these fund managers are going to take me to the cleaners or something like that. They're basically generally safe to deal with. So one of the things that happens, for example, through regulation is to ensure that investor funds is kept separate from the funds of the fund manager, of the fund management company. So investor funds are normally kept in what we call a custody account in usually a separate bank, custodian bank, all right? So that ensures that the risk that if a fund manager went down, it will go down with your money is highly minimized. That's the good news. However, it also means, like I said, the fund managers are regulated. So the first thing that you want to do is to be sure that your fund manager is actually regulated by a recognized regulator in the Capital Markets Authority, for example, in Uganda, in Kenya, in Rwanda, even in Tanzania. It's basically there's an authority which does exactly the same function. And indeed, in many other countries, there will always be an authority. So just check to make sure that your fund manager is actually licensed by that authority. And it is not just licensed, but it's actually licensed to provide a given product, the one that you're purchasing. You see, fund managers could be licensed to do all manner of things or to provide all manner of specific products if you look at their license. So you just want to be sure that, for instance, if you are buying a unit trust from that fund manager, that the fund manager has actually been licensed to provide a unit trust or unit trusts among other products. Okay. Still related to the issue of regulation, you obviously want to check and make sure that your fund manager has not had any run-ins, any issues with regulators. They haven't been called out or sanctioned at some point in time by the regulators. Depending on what the issue is or was and how it was resolved, that could obviously be a red flag for you to watch out for. Next, you then want to check on basically the level of transparency from your fund manager with respect to issues like fees or investment costs, if you like. That's very important. Is your fund manager coming out and tell you all the fees that you have to prepare to pay? Or is your fund manager hiding some fees, hidden costs? The more hidden costs in your product or product transaction, in my view, the more cautious and careful you want to be. I mean, why would they hide those fees from you? Your fund manager should be able to manage your, give you exactly what to expect and what not to expect. You do not want managers who promise you heaven on earth. In the end, some of them will end up delivering maybe a mixture of heaven and hell. So you don't want that. You want your fund manager to tell you exactly what to expect and what not to expect. You want your fund manager to be clear and straightforward about the strategy. This is very important. The investment strategy. Because that is essentially what you're investing in. The strategy. What does that mean? How are they going to invest your money? What will be the strategy for investing your money to give you the investment goals that you are looking for? Are there some specific sectors, for example, of the economy that they prefer to invest in? Are there some specific asset classes that they prefer to invest in? What strategy will they use to deliver the goals that you're looking for? Your fund manager should be straight and upfront to you on that. Even if they are not, I urge you, please ask them, what is the investment strategy for this particular fund? Having done that, you want obviously to check and into the history by asking previous investors whether there have been incidents of sort of breach of trust between the fund manager and clients. Have there been any ugly incidents in the past? Talk to people who have invested with them. Finally, and very importantly, please check the performance record of your fund manager. So, performance in terms of returns, for example. Fund managers usually have what we call benchmarks, meaning if a benchmark, for example, is the inflation, or it could be the treasury bill returns. You would want to check and make sure that the fund manager has performed relative to that investment benchmark. In other words, their returns have been equal to or even better than that particular yardstick we are calling the benchmark. If it is inflation or inflation plus 2, for example, inflation right now in Uganda is around 10%. 10% plus 2 is 12. So you want to check how often in the past have they beaten that benchmark? Have they outperformed that benchmark? Yeah, there might have been incidents here and there, life being what it is, that they underperformed. I'm not saying that you should run away from them just because of that. But if there is a pattern of underperformance against the benchmark, then you might want to check and see if other fund managers out there performed better. Thank you very much for listening and watching me. And once again, do remember to get in touch through the contacts that you have, or to talk to other financial advisors before you invest in these products. I look forward to talking to you soon again. Thank you.